guys, welcome to Passive Earnings. It's been 66 days that I haven't uploaded a video, so this is for you guys out there. This is a video in which I'll update you guys with my portfolio. As you guys can see, our portfolio has now $145,000 worth of stocks. For the most part, I have QQQ shares, which are over 104. My cost basis was around 440 and current QQQ price is $462. So I've gained roughly about $2,300 on that position. This is my biggest position in my stock portfolio. The second is SCHD. SCHD, I have 509 shares, as you can see, with a average cost of $72.36. Currently up 7.52% with $2,700 total. Now, what I've been doing in last couple of months is I have found a way other than selling options on SOXL, which was my strategy previously. If you know, I've been selling QQQ, selling puts on QQQ, and that's when I got assigned at $440. And the anything that is above 100 shares on QQQ that you are seeing here, which is 4.37 shares, all of these are from the premium that I reinvested, that I got from selling cash secured puts, and some of them from once I got assigned the 100 shares, I got um, I am selling covered calls on my 100 shares. So that is that 4.37 shares that you see uh, are all from those premiums. Same goes for SEHD. SEHD, I initially was selling covered calls, but it has monthly options, and I really don't like to play with SEHD monthly options because the price can fluctuate a lot from 72 to $80, and then you'd be out of your stocks, which I don't want to do anymore with 500 shares. But the recent update that I made that I was about to talk is that I have started playing options on 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 a list of different screeners. So these are the three screeners that I have created in Robinhood. One, the most recent one is X dividend screener. So what I'm doing is I'm looking at the X dividend stocks that have X dividend dates in the coming week or so. So say for example, Nvidia is going to pay some dividends on June 11th, which is next week. Same for Google here, and then sell options on that. If the shares get assigned, you'll be on before X dividend date, so you will get dividends from these stocks. And I've filtered it with market cap, so that's why you are seeing Nvidia over Google. Nvidia is almost reaching $3 trillion market cap. So I have started working and selling options on these. And the second important thing that I have noticed is the premiums are extremely high around earnings, right? So why not play options and selling covered calls and cash secured puts on companies like Broadcom, Oracle, Adobe, Accenture? All these are multi-billion dollars companies. They are considered as mega companies. And then if you see here, my next play would be with Adobe. So Adobe was up today and 1.5%. So that's why I didn't sell put options here for Adobe. And money was also tied in waste management put that I sold at $200. But once I get my money back, meaning it expired, the sold option expired worthless, so it'll get back to me very soon. What I'm planning to do this coming week is I will sell a put for the next week, which will be June 14th. And my target price, again, like I'm trying to eye the zero point 0.2 delta here, which is around this. So $427. I may go little deep as well. And reason being, it's a earnings week for Adobe, as I showed you from my screener. So I will be making um, roughly about 0.5% in just 1 week, which is $380 on a $42,000 investment. I'm willing to take that risk. It is a company that I really truly believes in, and this company can grow a lot more. Currently, the PE ratio for Adobe is around 40, which is a little high, but at the same time, if you think about it, the growth of this company over the past decade and the subscription model that they have and the monopoly they have created for software products, Adobe is not going anywhere. So even if it get assigned to me at 427, which is highly unlikely, there is 83% chance that I won't get assigned. But even if I do, I'd be willing to take that risk. Or if I go a little aggressive, that'd be a $430 strike price. That would give me 1% return, meaning $43,000 I would put in, and by the end of the contract, if it expires, I'll get this money back, but I will also be making $430 for the week. So if I keep doing this, and what I'm doing with this premium that I'm collecting for the last couple of months is I'm buying SPY. Average cost is 527. I'm currently up $12. All of this money is from premium, so I did not put a single dollar from my own pocket in this. But the issue that I see with Robinhood here is that it does not give you point in time returns, meaning it is showing that I had on January 2nd I had for $140,000 in my Robinhood account, which is not true. I had a lot less. I think I was around $100,000 in January, meaning I have added some money, but at that time, in that point in time, I didn't have this big of a portfolio, 140,000. So this is the reason that I'm thinking to move to see actual returns. Because if you see these returns of 3%, this is not actual reflecting my total return, because I may have added $20,000 somewhere around here, which it expanded and it showed that I have added that money on January 1st, or back in time, which is not too true. So return on the cash is what matters, and this does not show you that. So that's why I'm thinking to move all of this to Fidelity, but only time will tell. For now, I think this looks good. I'll be selling another cash secured put on Adobe next week, as it has earnings coming up, and we'll be collecting around $400 in premium. So that's about it. I hope you guys like this video. If you haven't already subscribed to my channel, make sure to do so, and I'll see you in my next video. Till then, take care of yourself and people around you. Goodbye.